Most of you guys know me that I don't hype the markets up. I just give you the charts, the data, and I let you go away to make your own decisions with where you think things are heading. Maybe we could be underestimating this move to the upside. Bitcoin hit a new all-time high today, $116,800. Now this marks two extremely important occasions on Bitcoin and for our other indicators with the stablecoin market. On top of this, we also have other all-time high prices. We have new fresh highs in some of the other markets that I've been covering with a multi-year bull market potentially in the process. And of course, everything that is leading into the peak of the winner's curse phase of the 18-year cycle, 14 years up, which potentially, and I think is going to end up with a major collapse of roughly 4 or so years down for real estate and the economy in the US. And countries like ours here in Australia and Canada and the UK are probably going to follow suit. But before I get to the craziness of that, things are really heating up to the upside here. Bitcoin 650% for this cycle so far. But the really major thing that is never done in this entire history, and I know you've heard about those things before, but I think this is really important, especially if it can build on this day by day, is this is the first time we've closed above, on a daily basis, above the nearly 8-year resistance line. Even back in December and January of 2024-25, it got extremely close, touched 8-year resistance to almost to the cent, and then got rejected for that 30% move down. This time, however, we're broken above and closed one day. Now, if you have been following the channel, I suggest you do. 1 in 4 of you haven't been following, but hit the like, subscribe to the channel, as many of the rules that we discuss here are very helpful to keep us on the right side of the market. Hopefully that has been helping you. So if so, hit the like button. Now, I generally like to see at least 3 daily closes above an extremely important resistance level. That just helps us identify the probabilities that we're going to see further upside. And I've talked several times before about this particular resistance line, and what happens in the markets if they're able to break through these resistance lines is that it can, and I'm trying to contain the hopium here, but it can send things quite parabolic to the upside. Not forever, and as you'll see with the time counts, we are getting towards the end of moves here. But it could go on a little longer with things like the S&P 500 also seeing really strong moves out of, well, the first low in April here, but also getting back towards its own logarithmic resistance level, which stems back 16 years, actually 18 years from the high and 16 years from the low, which is now less than 1% away from breaking through that as well. So if the S&P can break through these levels, the theory that I've been holding here on the channel is that Bitcoin can also do the same thing and we'll potentially see much bigger upside. Now, you're probably used to hearing me talk about all of the wall of worry items, but the importance about all the wall of worry narratives that we see build up in the markets is that we see the market brush these off and continue higher. So the big nugget here to take away, at least from my experience, and maybe that's what you're asking for here or learning a bit more, is that if we begin to see the wall of worry items not get shrugged off by the market, then that could be a news failure. Now, of course, we follow the price action, and the price action will let us know if it has been a news failure, and we'll also be able to track along with our trend indicators and sentiment indicators and cycle analysis, of course, but that is a little way away at this point. We still have a lot of wall of worry items, essentially bad news events that the market has shrugged off. It has new fresh highs, and you just look at the 2020s and add in here the wars. The wars for S&P, well, the wars for Iran and Israel, which were reflected on the price of the S&P 500, basically went down for one day. Now, I've got heaps to get through in today's video. If you haven't already, hit the like button and subscribe to the channel. The main ones I'm looking at here is new all-time high, and the sentiment seems to be growing in this case. Now, the stock markets seem to be resetting and obviously continuing higher. I'll get to that in a moment. The real estate and the economy, obviously tariffs, that was a big one on a deadline here on the 9th of July. The US obviously is now just closed out the 10th of July. We talked about debt and leverage in yesterday's video, which I'll leave a link to at the end of this video if you want to catch up on what's been going on in the financial markets, maybe from a different point of view if you're new here. And of course, the AI narrative that continues to build. Metals, as I've talked about, silver is the big player here. Alt season, another massive one to talk about. And of course, the US dollar, which brings in everything. It ties it all together, not just about just altcoins or just Bitcoin. I look at the overall markets because this is what I do on a full-time basis. I manage my own portfolio. So let's have a look at some of the bigger announcements, I guess the big things that have happened in the last 24 hours. Just some nice numbers here. $4 trillion for NVIDIA. So the AI narrative continues to grow. You'll probably keep hearing about the market caps of these major Mag 7 players as they approach 4 trillion, just like Microsoft, Apple's 3 trillion. And Bitcoin could be in the process of taking out number 5 here, Amazon, as it's only about $10 billion away. I think it will get there. I think most of us believe it's going to do the same thing. Silver is my other big play here, closing in on $38 an ounce. That's a new 14-year high. And a couple of the other big names, Ethereum and Platinum, also doing relatively well today. Ethereum hitting $3,000. So I alluded to some of the big things that just happened for BTC. A daily close above that level. It's never happened before, and this is connected to the highs, like dead on the highs. We're not just trying to move these lines around. It's dead on the highs of 2017 and 2021. One day. Okay, let's see if we can get a few more. The other thing that we've been following a long time here on the channel is the USDT dominance. The reason for this is a breakdown of 4.4%. Probably going to see money flow out of stablecoins and into Bitcoin and altcoins, and that's obviously where the excitement will eventually come from. I suspect it's got to get below 3.7 for any sort of significant altcoin season to come about, but we're getting there. We're on the way. It hasn't got there yet, but it's got the 4.4 level right in its sights here as it has been holding up above the all-time support line, what I'm calling the all-time support line, because that has called every single Bitcoin all-time high and significant Bitcoin top that we've seen in the market, except for what we saw through November, December, and January, where it closed below those levels and then climbed back above. This could be in the area of the breakdown that the market, the bulls want to see, the bulls, below 4.4% on its way to 3.7. So essentially that USDT flooding out and hopefully finding its way into your altcoin, or of course, mostly Bitcoin, if you're a maxi on Bitcoin. But as USDT trades between 3.7 and 4.4%, yes, there's going to be a little bit of outflow into altcoins, but I suspect it'll be mostly contained in Bitcoin. Yes, there's going to be the odd altcoin that's going to go crazy, but I don't think it's going to be like market wide where things go nuts. I think that's going to come underneath 3.7%. And now if we're tracking both of the stablecoins, the largest stablecoins there, we're looking for a breakdown of about 6% to begin here. That's the lows that you can see that have formed as support, getting very close as well. Then you've got the all-time support line here, basically from each of those lows. And then you come down to this double bottom level of 5%. So it's about 1.2% away. I think if we can break down that, then you have even more stable coins coming out because this one includes USDC, not just USDT. So I started the intro with a fair bit of hopium of how the markets haven't seen these levels before. They haven't closed at these levels before, which is also a very strong indicator for further upside, especially if we see continuation of closes above there. But just to bring things back into perspective, looking just solely at the data here, we've had a double bottom and a double top. Now, if this remains in this zone between this level, basically a trading range, it's just going to be more of those funds coming out of stable coins, going into the stronger assets, Bitcoin and so on. And then if it finds support again at 5%, and in the case of USDT, 3.7%, and it just keeps trading around this level, that would most likely lead to a trader's market as opposed to this all-out, full-blown altcoin season. So just keep that in mind as this market continues to track down, because we are definitely seeing more excitement in that altcoin space, even though Bitcoin dominance has basically only fallen about 2% from its high. And each of the previous moves had been 4%. So that's from this high here, 6.5 to 65% down to 61, 62%. And then this major decline on the Bitcoin dominance, which generally suggests you're going to get some sort of altcoin season. This one here was from 61.5 down to 54.5, so basically 7%. And that was enough to get the market super excited, also excited here. And at the moment, we're at 2%. So just half of what we saw a couple of months ago there in May. So just trying to contain things here so that we don't get too over the top with altcoins until there has been significant breakdown and significant confirmation. Now, our daily videos cover many detailed charts, data, indicators, and our forte, the cycle analysis, to help guide us through the investment cycle. So if you're a brand new subscriber to the channel, then I highly encourage you to get our weekly reports on Bitcoin, altcoins, and the economy, including the real estate cycle. They're easy to read in under 5 minutes each, making them extremely digestible for all investor levels. There are 3 reports coming your way starting your week from Tuesday. It'll get you up to speed on how we forecast the markets and how we've been able to profit during uncertain times leading into and out of the cycle peak. It's completely free, so subscribe today using the link in the top of the video description and you'll receive your first report shortly. In regards to the real estate cycle, if you're unsure where to start or you're wanting to take that to the next level, we've got a sale on TIA Premium today, link in the video description. You can check it out there. But let's get back to the analysis, looking at the S&P 500 against BTC. The white rectangles are the Bitcoin bull markets. If we get a clear run up like we see with the S&P 500, generally Bitcoin follows suit and in a pretty significant way. At this stage, it doesn't look like things are going to be different. So I'm going to keep following the model that I've laid out here for the last several years for you guys. And we'll just keep watching to see if this happens or if we get any sort of invalidation that would potentially suggest to us that the market is changing. But at the moment, it seems like things are still heading further north. We talked about things that can go wrong. In the case of invalidations, any of these sort of news items, if they start to show news failure, we see more money printing as an example, and the market doesn't necessarily respond well to that. That could be the start of some sort of news failure. We have seen total money market funds hit a new high here, yet the markets keep going up. So we're seeing more money sitting on the sidelines and the markets keep going up. As you can see here, it typically happens pretty sharply towards the peak. There's 2005, 2009. So that's the bottom of the stock market, and the top was around 2007. So right through the middle there, you can still see that the money market funds are bringing in more funds. They're hitting new all-time highs. That's only normal, especially when the market, well, when the government and the Fed are printing more money and making it easier to obtain credit. That's the same thing as printing money, as what's happened with the government and the banks, allowing you to have, or allowing the banks to have less money held, which means they can then go and give that out as loans and create credit, which is exactly the same as money printing. They're just creating money out of thin air. But I digress. Looking at the chart here, further upside, and it continues to go on as the market comes down. So we could be in the middle of that now. Maybe we're at some sort of 2005 leading into 2009. I happen to think we're somewhere in there for the stock market. So this could keep going up to 2026, 2027. And as the stock market starts to come down, it'll keep going, 2028, 2029. You know, the money just starts to come out of the markets. Now, in terms of the sentiment for the S&P 500, extreme greed, basically tracking between greed and extreme greed as it's trading in all-time highs, seems pretty normal. The interest rates continue to hold here at 4.5%. The market is not seeing a cut in July, but that's not a bad thing, because you're still seeing the prices of the assets go up. And I'm talking specifically here to traders and investors who want to do something with their money, or if they've already got their money invested. It doesn't necessarily have to be that the interest rates have to come down. We've already seen the stock market's up over 30 or 40% since those lows. They're at new all-time highs. So basically, it's up. Bitcoin, new all-time highs. Commodities, new all-time highs. Real estate, all-time highs in the US and Australia. So it doesn't necessarily matter. And if the interest rates do get cut, as we typically see looking further out here, September, it looks like there's a higher chance that they do get cut by 0.25%, then that might just be more fuel to the fire for the markets to continue higher. Now, the US dollar also continues just to hold here at 97. The theory that we hold is that this has got further to go on the downside on the longer term, which is just going to be more fuel to the fire for the rest of the markets, especially risk assets. We haven't seen any sort of invalidation of this long-term move. The reference range that I'm using for the downside is the largest correction before the market turned up. So that's the largest correction, and we have exceeded that. There's the high that we have for this cycle. There is the current low. It has gone longer to the downside in time and in price. So with any sort of rally that occurs from here, I suspect it'll be short-lived compared to this move here, which is now coming up to 3 years. And I suspect it'll continue down over the coming months, if not years, to happen for the pattern, the structure to happen similar to what happened last time. So further downside, I think that's just going to play all into the narrative of further upside for things like commodities. So now we hit the commodities. Silver, new fresh high. I believe it is a 14-year high. We've seen 3 new highs for this month of July. This is that multi-year bull market that I think we're on the cusp of for silver. And if it hasn't already started, you can see it's been up since this September 2022 low and March 2020 low. So you could argue that, yes, it's already 5 years up, but I'm looking at breakouts here into new fresh high prices, whereas all this really wasn't too much of a fresh high. You could argue, yes, maybe it was about 7 years, but now we're at 14-year highs, and I think we're on the cusp of getting to a new all-time high, if not going even further over the coming years. Looking at the exchange volume over the last few days, it continues to hold steady here at around 29 to 30 billion. We want to see more energy, more money come back into the space, especially with Bitcoin hitting new fresh highs. But for the altcoin market, we definitely want to see this exchange volume start to pick up. So I think over the next 2 days, we'll get the data for the 10th and the 11th after we've seen these new fresh highs. And that should, if things are trending in the right direction, we should see this start to tick up and something happen similar to Q3 and Q4 of 2024, just before that big boom in all of the exchange volume. Now we're seeing that happen in the liquidations. These have got to be one of the biggest shorts liquidation days in history. $1 billion of those shorts got liquidated. I just love seeing this red bar. So the largest time was May in 2025. And this time it's only showing up $500 million here for the shorts, 447 million. But as you can see for the 24-hour, the rolling 24-hour, we're nearly at $1 billion for the shorts getting liquidated. So a pretty big day to wipe out more of that leverage to the downside. And potentially, if more people get a little bit crazy for the longs to the upside, getting in the leverage, we might have to see one of those events occur again, like we saw back here in February, a lot of longs getting liquidated. So just keep on the watch out for that so that things don't blow up and get a little bit too crazy. Now this chart goes through the resistance levels to the upside. We're looking for the mid-30s as one of those next significant ones. In the short term, somewhere around the 120s. This is looking at price extensions that we've looked at or that we're using, that the market's given us over this entire bull market cycle. So looking at reference ranges from cycle lows to interim peaks, then projecting them off other significant lows in the market. And they've been working very, very well. So this is the way we look for price targets and areas of potential resistance. And with this cluster up here, somewhere around that 130 to 160s, I think is going to give us some sort of indication for maybe a pause or a slowdown there. So to altcoins, a big one that a lot of people have been watching and waiting for. They are up. They haven't broken through those levels yet. However, they're in the right direction. The colored line in the background is the Bitcoin dominance. So we can put that on and off there. This one excludes stablecoins, so it gives us a bit more of an accurate picture of what's going on with Bitcoin versus the altcoins. So we can get rid of the stablecoins. And we've got the total market cap here in white. So that's in the foreground. So if I turn this one off, and we just look at the altcoin market cap excluding stablecoins as well, you can see that it's needing to close above around 700 to 740, 750 billion dollars, which are all of the previous highs that we've seen since February of 2025. So that's going to be a key level there for the altcoins to get above. so that we can start to see some big moves like what happened in November and December. I think the majority of people would like to see at least some sort of move like that. You're probably not here just for that sort of move, what happened in May. I think most people want to see some big moves. So if you want the larger moves, you got to wait for the larger breakouts, the larger confirmations, longer term time frame confirmations, and the confirmations above key levels, not just the sort of small moves. Now, others would argue, well, you've got to be buying up all the lows. Sure, if you can pick every day that you've got a low and not buy any of the other days, then you're going to be in front. But the majority of people, and we know this for fact from the markets and how they continue to churn out the traders, is that the majority of people try and buy every single day all the way down. They may buy the low here and maybe this low here as well, but they bought the other 100 days before. So their average price is somewhere way above where their low prices were. And it might have even been better just to wait for that breakout anyway. The thing that people can't hack is that you see the price already go up and it plays on their emotions and the psychology. But if you can get over that, well, then that gives you an edge compared to the 90% of traders who just can't get over their emotions. So here we are with the others chart, and it has been climbing, but it also climbed in June and then crashed, and then May and then crashed, and we haven't got to the overbalance in price. Things are turning. We got a fresh high here of the last 2 weeks, but I'd really love to see this thing get above 8%. That's what we've been talking about on the channel now for several months. 8% is the mainstay here, or at least the last couple of months. And then 9% is the key level back all the way here that has been rejected once, twice, 3 times, 4 times, held as support prior to that, but then broke down in February. So that 9% level is the next key level for this altcoin market to get above, to then at least test those next higher prices. Now, if you don't want to wait that long, this is a bit of a trading side thought here. Sure, you can get in as early as possible, but you've got to have those stops in play. If you see things reverse, it's probably likely it's going to go further. I've covered this in other videos. If you try to get in early and it does the run, but then comes all the way back, you've got to keep those stops in. It can keep you safe from losing more and more money in the markets. So with that said, here we are looking at ETH. I'll check out XRP. And maybe time for one more, but ETH is a big player here at the moment. It's broken above $2,800 and my key level of $2,900, touched for a microsecond at 3,000. So this is the first time it's been at 3,000 since the crash in February. So there's that crash day there, February 2nd. And the level of 2,900, we've closed above that for the first time again since February 2nd. So it's been rejected multiple times, and I think we're potentially on the verge of saying goodbye to this. Well, we're definitely saying goodbye to the 50%, but we're saying goodbye to the resistance level of 2,750 to 2,900. So we can start to clear away a few of these, which means we've got a clearer run to the upside, giving us a couple of price targets here. 50% has been sliced through. 100% coming up is at $3,600. If we're going even further, 150% of the current move takes us out to $4,360, which means it would be the highest move this cycle, but still short of a new all-time high. The all-time high we're aiming for, $4,870 for ETH. XRP is also doing pretty good things after breaking out at $2.35, now at $2.53. Here's the chart with my lines on it. It also closed today above 50%, so that's above $2.51. Key level there. Now the next target, $2.65. That's those previous tops here at $2.60 and $2.65. So to clear that, that would be the next stage. And then of course, a couple of these peaks here, and then the 340 and all-time high, which goes back to 2017 or 2018 at $3.50. So it seems like it's working towards these levels now with those higher lows. So my view, if you're after my opinion, is I think there's further upside to go here for XRP, provided its $1.90 low holds in play. SUI has been a big mover in the last 24 hours, jumping past its 50% of $3.30. And then those next high prices are around $4.20 to $4.30. So also doing pretty strong things. Solana, a little weaker out of the altcoins that I've already covered, but it's still above 150. 180 is the strong level there, or the resistance level that held and then also got rejected from. So that's why I think it's a little bit weaker than the other couple that I've covered. Hype getting very close to a new all-time high price. It has put in a new all-time high daily closing price. Volume is increasing, but the bars aren't getting crazy here. So I think Hype has got a really good chance for further upside. Final one here for the alts. Pepe has closed back above the diagonal, but just on the weaker side, there's a lot more work for it to do. The breakouts finally occurred. We got the 116,000, a nice break and close above the 7-year resistance. Do you think this is the most underrated move so far? Let me know your thoughts in the comments section. Try to avoid the bots. Like, subscribe. Don't forget the sale is on too. That's it for today's video. I'll see you guys back here with another update very soon. Hopefully we hit the 120K over the weekend. See you then. Cheers.